All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and the word of the day today is dead cat bounce. My goodness, today, another rally. We closed up, and after day 2 in August, we have now had the 2 best days since 2020, following the 5 worst days since 2020. So, the volatility, it is playing out, and how today played out, it was crazy. Everybody was asking, did you buy on the long term? Was this the bottom? We've heard this before, but now we finally moved, and we got to talk about it. I got a little bit of the play, but before we get into anything, we got to talk about it because I'm sure everybody was watching this today. Not only did you have all of the market moves, the dollar, the bond, and everything else, you also had Elon Musk deciding to go forward with the Twitter deal. So Tesla started dropping, Twitter popped up. They are right below $54, but the original buyout price of $54.20, Elon said he decided to go through with it. Pretty much they're settling the court case. He sent a letter to Twitter. Twitter confirmed that they received it, and it says it's pending financing, but for the most part, it looks like that deal is there, and you can tell by where the stock price is trading. But that was crazy. We're going to get a lot about that. We're going to talk about that when we get to the plays, and then let me give you a pretty picture in the name of all of the movement and everything going on right now. Just please do not forget, you've had 2 bounce days, the best day since of October, the first day since 1930, but even today, though, the bonds and the dollar, all of that is still in play. And what a lot of people are bringing up now is the divergence between NASDAQ and the NQ futures and the bond yields. So let's see here, pretty much bond yields, they've bounced a little bit higher than the NASDAQ. Maybe that's why TOT isn't going up from here, but keep your eyes out for this week. This is going to give us a lot to play off, and we still have a lot to talk about. So we got a lot to cover. I got the plays for you. We made a bunch. I went big. I went really big on another, like $40,000 big on a trade today that I'm really liking. We didn't do much with the futures, and I really did not do much today, and been doing a lot of sitting waiting. And in the name of the dead cat bounce, the barbell, you know, like bench press, baby. Amen. That is going to come up. So we're going to talk about that. Got the plays, the recap. There was a bunch of other news today that had an impact, and then how we're setting up for the rest of the week and what's going to be the most important. So drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. YouTube.com/ I don't know what I'm doing. YouTube.com/ the stock market. We'll see you there. It's free 99. All we ask for is positivity, and thank you if you've been positive and contributing, baby. But let's get it. Peak volatility. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson. I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
Well, right off the bat, Chad, we got to start with the dead cat bounce. I'm going to keep this very simple for you. We will find out on Friday after the jobs report in the morning. Thankfully, it will come out an hour before the bell, but on that Friday, this Friday, we will find out whether or not this is a dead cat bounce or not. And honestly, I don't even know where the term dead cat bounce comes from. Apparently, if you like drop something, I'm sorry, Pelosi, like it's supposed to bounce, you know what I'm saying? And that's what they're saying, is that the drop was so big. This is just one of those big bounces for no reason. You got people talking bear market rally, all of it. But this is what I'll tell you. Don't believe anything. All I'm saying is follow that data on Friday. Depending on what happens, that is what is going to give us the runway. So it's very simple. If that jobs data on Friday ends up being bad, if it comes in lower than expected and we see that employment is declining, a literal bad jobs report, that would lead the market to rally. A lot of people ask this question. The reason is a bad jobs report and weakening job market will not allow the Fed to be aggressive and keep raising rates. You could get a lot deeper with that answer, but let me just tell you something real quick from this week. every single bounce this week has been fueled by bad jobs data. So yesterday, bad jobs data from the manufacturing report. Today, the jobs openings, they dropped, and that was part of the upside that we got today. That was one of those pieces of news. But again, bad jobs data, it led the market to rally up, and that's what I'm saying. If Friday is bad, then we are going to get a good reaction. If the jobs data is good, then it will be a bad reaction. But the whole point is now, what sort of move and runway do we get leading into the CPI and the Fed minutes next week? Remember, that is all happening on Monday and Tuesday. So we brought this up on stream. I brought this up on the watch list. This is that May 9th, May 10th, volatility that we had. But now that we have popped, it gives more evidence that Friday was that new low set. And that's why now we follow the data, see where we end up by this week. And then next week, the data is even bigger and you're going to get a bigger reaction. And that's where we're going to see what's up for now. So as far as a dead cat bounce, bear market rally, you better short the top, you better buy the bottom. It is too hard to say, and you gotta wait for that data. But all of the movement in the meantime, this is setting the stage for Powell's CPI in minutes, so don't you forget that. But that is the first key. And then coming into key number 2, baby, this was the other thing today, and unfortunately, it fed that pivot rumor. But the RBA, that is the Central Bank of Australia, they announced this morning that they were gonna go for a 25 basis point rate hike instead of doing a 50 basis point. So they still decided to raise rates. They didn't stop. They didn't pivot. They didn't cut the rates. However, the fact that this morning now, after watching all of the central banks pivot and U-turn, literally, Japan needs to intervene. UK announces a plan, then says, no, we need to intervene, and we got to backtrack it. And now today, the Bank of Australia, they said, well, we're going to raise rates less than what was expected. It literally was a market shock in the sense that nobody was pricing it in. I think 2 out of 70 economists were even expecting Australia to go for a smaller rate hike, but now this gives a lot bigger fuel to this pivot speculation that we've been getting. If anything, and this is something we're going to watch play out over the next couple of weeks, again, whether it was the UN and some of those rumors yesterday, but you're watching the pressure start to ratchet up there on Powell. This may just be evidence today with Australia that maybe Powell will go his own way, or if the rest of the world starts pivoting early, that may give you a lead up into what Powell may do. But this was a big deal. It's not like we follow Australia too much, but the fact that a central bank decided to slow down, it's not coincidence after what we've seen. And now if that sends a message, or if people want to start buying that, again, that rumor speculation, people are still loving the pivot. So be careful for that, but watch out for that. And coming into your final key now, man, this is what I'm saying with everything. We can move big, but all of it means nothing until we get the data. Yes, that jobs data on Friday, that's the first set. But again, next week, CPI is going to be huge. That's the real data that will really drive levels. Again, think about it. If that CPI comes in really hot or really cool next week, tell me that won't be the evidence to justify, no, we should be higher, we should be lower. It will give a lot more conviction to any of these moves that we've seen. Again, we were just at 358. Today we're at 378. That shouldn't make sense to you. I know you're frustrated, but think about that for a second. There is no conviction anywhere, and you need the data to get that conviction. So keep that in mind. We have Friday, but like I'm saying, whatever happens on Friday, that could give us confirmation. If that jobs report follows all of the negative data this week, ends up being bad, and we rally, that could give us runway, and then we're just going to start hitting levels until Monday and Tuesday, and then next week, it's going to start with the minutes. Maybe the market could brush that off, and then Tuesday, though, that will be the real pivot point with the CPI. So like I'm saying, man, take all of this in. Don't get too jumpy. Plan accordingly and don't get trapped. Clearly the market's moving and there is opportunity if you want to take that. But if it is getting confusing, you're like, wait, this doesn't make sense. It doesn't make sense. Tuesday is the day it will make sense, and Friday is where we're going to get a hint. So hopefully you're ready and hopefully you're in the game. But let us get into the plays. So, right off the bat, we made a couple of plays today, again, in the notion of not getting trapped. I didn't do any of those day trades. I didn't do a lot of them today, and I was saying it. I did go long on AKAM. We're going to talk about that, but overall, I had good positioning. Again, I have downside and upside. My job right now is to dump them at the right time. Pretty much ride the up wave, dump the long at the right time, hold the short, and be able to come back on that. So I'm waiting for it. I have good balance. We picked up a bunch of stock on the Friday dip for some swing trades, but overall now I want to wait and I don't want to get trapped. Even on the day trades, I didn't want to do crazy. I did end up doing them today. We'll talk about it, but the point is here, if you have good positioning or you already have an idea, don't risk that until you get the data, because we're kind of in no man's land until we get the levels. And then the whole point is everybody knows this. Friday's data, Monday's data, Tuesday's data, it could change everything. That's the whole point you got to realize, and that is the risk with anything we are going to be dealing with. So with that in mind now, let's start with the first play. This is the one I went big on, AKAM. I brought this up yesterday. They had a buyout rumor, and literally this was the chart that I showed you. I was just saying simply the last buyout rumor, the stock is already like 20% lower. The first buyout rumor, they were saying 130, but even after the bell yesterday, there was another insider report saying they could get a buyout for 150. So in my mind, this is why I went in on it. Like I said, I just like the risk to reward, and that's the main reason here. I think I could lose money on this play. I'm not saying it's a done deal. I'm expecting if it does go against me, I could be down as much as $4,000 if it goes back down to the low 80s, high 79s or something like that. But the overall logic, I was even thinking, even if they got 30% or 20% less than the lowest potential offer, it would still put them at like $100. So I said, hey, let's go big with it if there is any news too. And again, this is my hope with the play, is that it is able to dislocate from the market. The news allows the stock to just do its thing and not get affected up or down, or if anything, just respond to the up, not go down as much. That would be the best and most ideal situation, but this is all just buyout rumors. So we'll see. I went into it. I bought those 50 shares yesterday at like 83.40. I bought 450 shares today at 85.20 to just level it out. My average is like 85.09 at this point on 500 shares. And my idea is just ride this till we get some feedback, or maybe if there is even a rally, like I'm saying, hopefully it rides with it. But the only way we really bank is either massive rally with the market or that buyout rumor. And I'll give you the caveat. Some people are doubting that any deal will go through simply because we've seen two big bond deals pulled over buyouts, and they're saying, well, AKAM, it would be a big deal. It would be related to software, a lot of future growth priced into it. It might be a hard deal to fund in this marketplace. And then, well, that brings you up to deal number 2 now. Tesla, baby. That's the second play. So funding is part of it, but that news on Tesla, man, it came out today that Elon is buying, and just remember how it played out last time. I think it's going to be a very volatile week. Last time, the market was very volatile when Elon announced all of it, but the next days following everything, bro, the candles on Tesla got huge. Literally, this is Tesla's chart last time from the buyout fiasco and all of that. So I'm assuming it's just going to be a volatile week as we get more details. We're going to see. I did position downwards. Remember, I had upside on Tesla yesterday. I rode that up today. I sold out before the news just because I was like, well, I caught a 6% move. I took like 150 off those 20 shares. But then we got the news really, really fast on the Tesla stuff in Twitter. I went short with another 20 shares and I'm up on those now. But even though I'm positioned for the downside, I just think you're going to get a lot of up and down this week, and you're definitely going to want to watch this. Or if you get bored, there probably might be a trade in one of these. So keep your eyes out for them. That is play number 2. And then finally, baby, play number 3, defense. Shout out to Graham, baby. I love the chat. Thank you guys for the plays. But Graham brought this one up. It is a ETF. It's like a UVXY, but for defensive stocks, aka 3 times levered, Lockheed, RTX, all of that. The whole idea is if defense plays go up, this goes up. Honestly, it's global tension plays, and that's all it is. So he brought it up. I like the risk to reward. It's at the lower end of the level. You could still lose on it. And again, any of these volatile ETFs or volatility ETFs, they have a natural dilutive element to that. So that is part of the risk, but it's pretty low. I think with 50 shares, 100, like we did with Yang, it could be decent. I don't have a play on this, but like I'm saying, depending on how global tensions pull up or whatever else happens, I would just keep your eyes on it. And if this thing stays low, I love the risk to reward. So definitely going to be keeping my eyes out for them. But those are the main plays. As far as everything else, we got to go over what I'm holding, but let's start today with the trade since there wasn't that many. I opened the morning with AKAM. I started with that literally within a minute. it of the bell. I was liking it as my upside balance and with everything else. Then Yang, I remember I told you I sold out of it yesterday. You probably noticed it was on there. I didn't even notice. I made a mistake. I ended up buying because I owned the shares. I thought it was short, so I ended up buying the shares and selling them. So I had to sell out today. Ended up actually taking a loss. That turned my $300 trade into a $50 loss. I know, tier. It's so sad, but oh well, there was that. That's a fat finger, but there was that one. Then Tesla, I closed the profits. Then as you see, about hour and 15 minutes later, I reopened it. Then my Amazon, I bought those on Friday. They had news about warehouse hiring, and then the market was kind of coming down. I said, let me just trim one, and I realized about like 450 on the Amazon shares. Again, that was just a good dip buy. 50 shares still produced about $400 net profit. And then I waited till power hour. I didn't do any day trades. Like I was saying, I'm gonna just let the balance ride, and I'm gonna show you what I'm talking about. But I decided to go for one. I went 378.650 to 3798. Or no, that was the other one. I did that 3789 to 36. That was like 3 points. Pretty much, I made about $280, and then I lost it all on the final trade right before landing, because then it popped, and then I said, all right, whatever. And I walked away with $12 net profit on all my ES trades. So after commissions, I'm pretty sure it's like $2 or something, give or take a little less. But there is that. And now as far as what I'm holding, man, this has to do with everything and the balance. So I have separated a little bit for you. I think you'll like it. I just have to do 2 different screens and all of that. But one, ES, that's the big one. Remember, I have no open positions. That was an option that I made free a while ago. But here's the best part about it. The market is higher than when we made all those plays. I have till the end of November on a option on the future for ES. So that one went up 1,300. Those micro ESs that I bought on the dip on Friday, remember, I took a $1,400 profit the other day on the big one. I kept the minis, but then I had the MNQ from yesterday, so down 900 on that, and then the MYM from the very well bottom, down 3,000, and we lost a little on that. But this is what I want you to see. Add up the first two, that's 29 plus 3, that's like, what, 3,200? That makes up for the MYM. So hopefully you're seeing what I'm talking about with balance. There is discrepancy. So I am expected that worst case scenario, I'll lose about $300 for every $1,000 that is lost if it really gets out of hand, whereas it's not perfectly covered. But again, hopefully you're seeing where I'm like, I'm just going to do nothing and wait a little bit. And then the rest of the other long plays and everything, again, Apple to the long side, still holding that. The AKAM today was able to get $2 a share, so made 1,000, but I have not taken that. Then the Nvidia from Friday up 480. Then we closed at the Tesla and I reopened it. I'll get to that one. And then on top of it, we realized that other 400 with Amazon. But hopefully you're seeing what I'm saying. I was slightly now lean to the upside, but we got a little bit of both. And what I'm trying to do is just drop these off at the right time if I am expecting that we are going to go up and down. How do I get clapped is if I drop one off and then instead of doing this, it just goes up or down in one direction. And if I pick the wrong one, then we will really get clapped. But right now, we are good for right now. So until I make the next move, I'm not really exposed to too much risk unless all the upside comes down and then we don't have enough downside protection, but I do have enough. So there is that. And now let's go to the losing trades, because I still have these. Again, like I was saying, it's hard with the active trader. I just got to reload all of them, but now I could give you a little bit more insight into these. That 6B, that euro, I'm getting pounded by the pound, bro. I'm down $3,000 on that, but I put an S next to that. That means swing trade. I'm not worried. This is going to be global macro. Let that shit dance. It's okay. Don't worry about it. But again, trade the micros or don't touch these if you're not familiar with them. That's what we're saying. These can move around big a lot. Again, that yen trade I first made, we did have big fluctuations. That's always the risk when you start with it. Again, on the first trade in the middle of the volatility, but it's going to swing that one. Adobe, we made some gains on it. I'm still down 740 from like a month ago or so, but that one I put a C. That's for cut. I plan to cut this once we could get up, or if I can make up a majority of the loss. I'm not really in love with that play. I was going for that dip buy. It didn't materialize, but I thought I could still ride it with the upside, but I'm not in love with that one. That one I am going to be looking to cut when it comes back up. AKAM, that one I put B for buyout. It's totally separate. We're going to hope that plays out. If it doesn't, things turn sour. I wouldn't mind to cut that one as well too, but watch out for that. Then ARC, that one, swing trade. I'm loving it. I'm holding it. Again, we were down a lot, but only down 160. We are in a great position, especially if it heats up. Boyle, I thought I was down more, but after today, we're only down $1,100. That's very, very good, but that one also going to be a swing. And then Tesla, that one's just going to be a trade. I'm up $50 now on the downside, and then UNG down 1,900. That one's going to be a swing trade. And like we said, expect extremeness in any energy plays. If you are not expecting extremeness, somebody said I was gambling because I'm expecting extreme. I said on UNG and Boyle, I'm either going to make a lot of money on on that or I'm going to lose a lot. I don't think there's going to be any in between. I'm not looking to cut it. I'm not going to look to do anything else. It's just very simple. It's either going to really work or it's not. And someone's like, you're gambling. That's extreme. But no, I think it's extreme that if you try to make an energy trade in the energy markets right now without expecting this level of volatility, kind of all or nothing, I think you're gambling. So I just want you to understand it. There's a lot of risk. Again, I said, if it doesn't materialize, we'll go down. You're seeing we're holding it, but we're buying into the bottom and now we're watching the wheels turn. But that's what I'm going to be holding. Those are all the plays. Just going to be waiting for the data. If we get anything, otherwise, I hope the buyout carries me, or if we get anything macro to guide us. Otherwise, Thursday, Friday, we might get a little bit more moves and then we'll see what happens. But I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember who is in control. That's it. That's all I gotta say. Who is it? Who is it? Don't point at anybody. Don't look at anybody. It's you, bro. It's you. You are in control. And if you don't remind yourself of this, if you do not actively seize it and take, you know, they call it exercising your right. You gotta exercise it. You gotta move it. Dave, outlet, defense. I'm telling you, I'm already moving my feet, bro. I'm telling you, that's it. You need to exercise it. You gotta take control. You control it. You control the amounts. You can control the risk. I'm telling you, that's the beauty of it. Look for alternatives. I'm still moving my feet, bro. I'm telling you, you're in control. That's it. Exercise it. It's game time, baby. You've been ready for it. I hope you're ready. I'm going to see you in the morning and little by little. And remember, don't get too emotional. All this is going to woo-song come right back. You're going to see it, baby. Amen. Amen. Okay, I love you. Good night. Good night. Good night. Good morning. Good morning. I don't know. Do you want me to leave? I want to leave, but I have to leave. I don't know. I don't think I have to, but you get what I'm saying, though, right? I love you. Thank you for being positive, too. And let's get it, Chad. Are you ready? I'm sorry.